Oh, my lights. Why am I so dark? Good evening. Good evening. Good evening. Good, this was now for my. Good evening, everybody. We are live. Let me just first see something here. I'm gonna make this up this way. Good evening. Seems like my sound is good. And my screen, I'm sharing my screen. You should be able to see my live chart now. I will immediately start this live. I know some folks. Good evening, Benita. Good evening, Karen, London, Monique. Perfect. So, welcome to tonight's live. So, we will basically be breaking down for those traders who are in my private group of the Academy. We're going to break down the trades we took for these past 2 weeks. Also, we're going to look at our results and then we're going to discuss a bit our risk management plan and the strategy that is keeping us making consistent profits. The goal with trading for me, as personally, is to be a consistent, profitable trader. I am not focused on the big wins, I am focused on consistency. And consistency, you build it over time. It sometimes requires you to be very patient with your journey, trust your process, the ups and the downs, to always trust the process. So tonight, it's not just for me about breaking down the setups, it's also about giving you where you can see live how I look at the market, how I get the market insight, and how you can also use the same approach. When you use the same approach, that you can get the same results as well. We've had some good wins these past 2 weeks. The market was acting up during April. The first 3 weeks of April was not so good. But yeah, at the end of April, the last week, and then this week was really good weeks where we could capitalize on the change over. If we look at the higher time frame structure on gold, as we are gold traders, we we can see we are in an overall uptrend, right? Gold is always gonna go up, even with the wars happening. What we do notice is drops, these massive drops that gold has done from 5,400 level. Remember the in January, the most economists has actually predicted that gold will reach 10,000 level. And that was the time when we were at January around here, gold was still at 4,600 level. And when it pushed up to 5,600, many of the economists, they predicted that gold is going to go to the 10,000 level, which is all the way up here. If we zoom out, all the way up here. That is still possible. However, we've seen the war. No one expected the war and the uncertainty happening with the economy of the US. So during January, you can see it was at the end of January. This candle happened on at the 30th of January. So you need to also understand that the market follows certain cycles, right? We are not just trading gold by follow, or we're not just following signals and look into. We are partaking in the global markets, right? Sorry. So, sorry, I just want to resend link via email. Okay, I will resend the link now. Yeah, so what I was saying that we are part of a global forex market. The foreign exchange market is global, and it does the effect of the wars, the uncertainty in certain economies that is doing bad. When the economy, especially of the US, is doing poorly, we start seeing major volatility in the market. And what, yes, not all volatility is bad, because you do need some form of volatility. But if there's too much of volatility, it's really difficult for us as traders to actually uh, follow the structure of the market. Let me just send this to Karen quickly. I was a link of this video, and the other member that is inboxing me now. Just give me a second. Okay, send. There we go. So what I was saying, the reason why I'm bringing you back to see the structure of the market, because one thing that I teach in my course, we are using key levels to identify where the market could go in the future, where the market could go next week, where it could go in next month, or even next year. But we use the tool to see the current structure, right? So I teach you, when you analyze the market, we always start from a higher time frame. We'll break down we want to look at the market from first from a higher time frame, so that because we understand we are day traders, we are not swing traders. We don't look for opportunities to trade for 4 hour, 5 days, weekly, or even monthly setups. No, we are not in that type of traders where we buy and hold. We're actually looking for that lower time frame volatility, so that we can get in and get out the very same day. But for us to get those perfect trade entry setups, to get in at the right time also, we need to have an overview of what is the overall structure of the market, right? So if we to get the overall structure, because you need to remember there is bigger structure market. I'm talking about now market structure. You get the overall market structure, which is the macro, the bigger picture, and then you get the smaller time frames. We like to aggressively get in scalping. You see that our trades play out between 30 minutes and sometimes 1 hour. When we keep runners, it will last like 2 hours or 3 hours. That is the longest that we really keep. But you can also use with the same strategy. It just depends on what time frame are you looking at. Time frame is very important. Good evening, William. Good evening, Karen. Thanks for joining us tonight. Right. So let's start with going back to the 27th of April, which was, like I said in the beginning, I'm going to break down our trades that we took for the past 2 weeks. We're going to start on the 27th of April. For those who are new on this live, this is my members. They are trading with us. We all take trades from Monday to Thursday. So if you are new, because this live is actually live to the public, if you are new, we trade by using supply and demand to enter, and we trade purely price action. You won't see a lot of indicators on my chart. You also won't see a lot of uh, unnecessary volumes. I don't use those things, because what we use is a simple strategy based off key levels and demand and supply zones. Now, I just spoke to you about the overall structure, looking at gold. And we can see the highest that gold went was at 5,600 around here, right? 5,600, and it dropped all the way down to 4,400, and then it came up in March. You remember that? And then it just dropped during March all the way down to 4,000. So we've been, most of our trades in March was we took some sells. This is from a higher time frame, and then you can see the market continued going up. Like I said, overall, gold is going up. So even these levels here, as you can see, if you use these trend lines here, you can see when it started in November last year, price came all the way down back, and then it shot up, came back again now in May. April, May, this was the we I'm gonna look at this from the 27th of April, like I just said. For this is the past 2 weeks that we're gonna look at now. And just check, this is now from a higher structure, the trades we took. Okay, so going over to the 4 hour, right? Now, on the higher time frame, I've already seen that we are in a downtrend, right? If we look at the daily, the downtrend is based on this right here. Yes, we are overall structure is going in an uptrend, but this is now minus structure. So minus structure is when you're looking at where we are currently. And we can clearly see, right? If you haven't done the course yet and you don't know yet how to read structure, basically we're looking at higher highs, lower highs, higher highs, lower highs, higher highs, lower highs. We're looking for this is structure. And when we see that kind of structure, we are basically just following that structure. So coming from on Monday the 27th, right? It was actually still a public holiday for us. And then let me just go to our time frame. So we normally come to the market around 7 a.m. to get like an entry before 8 o'clock. And just by, this is now on the 1 hour, right? On the 1 hour, we can clearly see that this market is in a downtrend. You can even use this to connect all the lows here. Your trend line, the really just this trend line is drawn based on these highs here, right? And these lows. So right now, when you see we are going in a downtrend, we're now obviously going to look for sells, and that is how I actually look at the market. First, when I identify the direction of the market, now I can look at, this is my bias of the day. It is we're going to sell. Now I'm going to my lower time frames. Now this was this here, right here. That is two double tops, right? And we can clearly see price came all the way up, and then we gave us these doji candlestick patterns that I teach in my course, how to read it and understand what it means. And then it came down, came back to that same level, and that is indication that price is at the resistance level right here, right? So it hasn't broken through, and we know our direction is bearish, right? So if I go back to the 27th, we still, our entry was at 4718. So normally what I do is I have a supply zone, right? So on our supply zone, what we normally do is we always enter on the 15-minute. So I enter on the 15-minute, waiting for an entry at 4718. So as you can see, this day we were still this was that day when we had to be very patient, right? Because you can see at the bottom it was 8 o'clock. And I still said we're gonna wait for that pullback to come back to 4718. And what happened there? Price retest exactly this week. Retest, and I have my zone. So can you see how confident I was? Because price came back to 4718, because part of our strategy is once it breaks out, it has to come back, it has to pull back, right? And we know how to, when you know how to draw your supply zone, your supply zone is there to help you to see how far the pullback is going to come. And as soon as it reaches 4718, you can check in the group. Our entry was 4718. My TP was 1. I give two take profit targets. The one TP1 was at 4707. So let's go there quickly. So TP1 was at 4707, like here. That was 110 pips. So 110 pips from entry. And remember, and what happened? Price hit our take profit 1. Our take profit 2 was at 4700, right? So 4700 was right here at the bottom. And I could see this day that price was gonna go all the way down to 4680. I could see it really, but that was the trade I gave you. The 4700 was the TP2. And remember what happened? It just pulled back a little bit, reached 471, like you can see 4700, pulled back at exactly at 4700 at our TP2, and then continue to drop all the way down. So this happens when you are trading with the trend. The trend is always your friend. You always trade with the trend. Please like this live. If you didn't like a live yet, like this live, because I'm going to share so much gems that people ask for thousands and thousands of rands. People ask so much money for this type of knowledge. Then they are not even transparent like I am. They are not open about their results, and they also don't allow you to even ask them questions. And that is unacceptable in this industry that we are in. I am not a financial advisor. I just want to make a disclaimer as well. I am not a registered financial advisor. Everything that I share here is my personal opinion on how I see the markets, and it should never be regarded as financial advice. Because you actually need to be a registered financial advisor to give financial advice, right? But the accuracy of the strategy is based on the demand and supply zone. Good evening, Peter. It's nice to see you. The demand and supply zone strategy, and we trading. We have an edge in the market because we trade one method. We are looking at the market from a higher time frame, and we always go back to the smaller time frames for our entries. But our edge is the reason why we get bigger moves in the market, is also we look at it from a 1 hour and a 4 hour perspective, because that's where we build our base, right? So this was a beautiful trade setup. Now, when we talk about risk management, I want to also talk a little bit about the risk management on this trade. When you get a trade like this, if you are not able to still to yet read the market, right? This is on the 15-minute. So this Monday, when I sent out the trade at the entry 4718, not all of us are at the same stage in our trading where we hold trades longer, where we even hold trades to TP2 or even longer. Remember, the trade idea that I give is a trade idea, right? If you follow it, it's depending on if you follow it and it works out good for you. If you follow it and it don't work out, right? You have to ask yourself what went wrong. So this is how I look at the market. Every time a trade doesn't play out, because I trade every single trade setup that I send out, I use the same method. I look for a breaking structure. I look for a pullback. I look first start with the from the direction of the market, right? This might sound a bit yamaka, but when you really like when I go through the course material with you, or when I take you from how I see the market from the start to the end, you will understand how all these things fit in together. But we are not swing traders. So we just want to capitalize on those smaller moves, right? You can ask me, just a heads up, you can ask me a question in the chat on WhatsApp. Ask me a question anytime. I will answer the questions as well. Right. So risk management. Back to risk management. Now, if you have a small account, let me tell you, this TP1 was at 4700, right? If you maybe you entered a bit lower, even not you didn't get a 4718. Your entry was maybe here at 4715, all right? So now some people entered at 4715, and also obviously there is a slippage. The broker, as you enter on the broker will also take their portion. So you will notice even if you enter at 4718, it will open at 4717, for instance, because that is the slippage that you pay to the broker as well. The broker that we mostly trade with XM, it does not really use that much. I'm also trying out a new broker. Um, so just to test how the slippage is on gold for that as well. But at this stage, it should not be that big. So now your entry is at 4715 and you are in this trade. I mean 4704, that is already 100 pips. Now, 100 pips or 100 points on gold, if you're using a 0.01, right? That means if you are trading with rands currently, you you make 160 rand if you use 0.01. Now, I want you to realize if you don't hold that trade to the full 100 pips, right? And you use the very smallest lot size is 0.01 that you can start with. So that means you only kept the trade open till 50 points. Then you only make 82 rand. The same with when you use maybe a 0.03 on gold. And that means you will, if you hold to full TP and you use a 0.02 or a 0.03, you would make 490 rand. If you hold it to full TP. If you hold it to only 50 points, obviously you're going to feel that you're making too little money. You're not going to like the fact that you see the little money because you're not holding to TP1. Now, I've realized that is one of the things of risk management that you also need to work on. If you have a small account, you are going to need to look at the A plus setups, right? Obviously, you guys are following me. I'm also talking to those who's doing the course now, who's going to trade on their own because they have the knowledge, right? If you are trading and you're using 0.01, I would say your goal should actually be to hold trades longer open because now you can make 150 pips and 200 pips, which means your account is growing. And but with that also comes the confidence to hold a trade. Now, the two fears that you can have while you are in a trade, the fear of when the trade pulls back, right? So when we look at this, the first fear is when a trade pulls back. So what I mean? It breaks. Look here, it when price move all the way down here. Now that's TP1. Obviously, I'm gonna take my money because I am not trading with a smaller account, and I'm fine with this at 4700. But if you now wanna hold a bit, you have two positions. That's why the rule in the group also, what I always advise is, even if you have a small account, use two positions, 2 or 3 positions, right? 0.02, if for those who are trading 0.03, use more than 1, 3, 4 positions, right? When it hits TP1, you take off 2 positions or you take 1 position, so you take some money off. You have some money. Now you have money to play with, basically. So now, obviously, some of us will get scared when it's year TP1. And look at this. Price pulled back. Your entry is all the way up here. Price pulled back. And then now you're again in profit. Coming back to you. Now you are again tempted to take your profit here. So you need to ask yourself, the strength of this market, is it going to go up again, or is it, if you can put your new stop loss right here just below where you entered, that means your trade is now risk free. That means you, even if it comes back, you already took some profits off at TP1, and now you're just leaving it for as a bonus for this one to run. And if it runs right and you leave it, like you being patient, I'm telling you this because especially with gold, the market is getting better now, and gold has a tendency to drop, or when it goes up, it will shoot up. So you can really capitalize on this, but you gotta have the confidence to hold these trades. So check here. So after it broke out, right, and it came back down, broke out of past the TP1 all the way down, that is over 330 pips. Even dropped lower than the 4680 where I thought it's going to go. It went to 4670. Can you see the key levels that the market, once it breaks one area, you can be sure it's going to go to the next area. So that could give you confidence to hold the trade longer. Yes, it's going to take a lot of psychological work for yourself to build that confidence to hold, to trust the analysis, to trust yourself as well, and not allow the fear of losing money to control your decisions. That's why when you risk too much money, that's the other fear. When your lot size is too high for the account size, not for you. You might be confident in using a 0.5, 0.10, but your account is not capable to handle that. Look, unfortunately, with gold, even if you want to make big money, you have to at least be willing to put some extra money in there. You can't be expecting to make like 5,000 if your account is on 5,000, right? It's not realistically, if you use proper risk management on one trade, you can probably make a 5,000 on a 5,000, but realistically with these setups, you're not going to make it. You might make a 3,000, 2,000 on a, because you cannot, unless you over risk, unless you're using a lot size that is high, you over leverage, you use more than what you can actually handle in your account. Your account size, your capital does matter. Your success in trading will really, you will see that your capital do matter. So let's go to the second trade we took. This was now Monday the 27th, all right? So we're gonna look at Tuesday the 28th. Okay, so I'm gonna have to delete this quick. Remember, we are still now in this downtrend, as you can see. So the trade ideas, the 28th, we also took a sell, and our entry was around 4,600. So let's go there and see. So this is now on the 4 hour. We can clearly see we are still going in a downtrend, right? From here, we're still going down. On the 1 hour, now we're going to look for, on the 28th, that was around 7. That was a normal day. Okay, let's move the market. Let's see. Sorry, let me bring it up. Do you remember? Do you guys remember this? So this was the day, I think we missed this entry first. 4,600, 458. My entry was at 4,600. Yeah. No, I was entry for 600. Oh yes, because we must. That was actually supposed to be our entry at 7, and then that was the day when the market dropped. Now I want to show you. You can still make money if you understand structure. Now this is a good example. So on the 28th, you can go check in the group. I send out the entry for 4600. I don't know why we entered so 4600 4584. Let's just see something. Yes. Remember this day, guys. Okay, I see now. So this was now normal time when this was actually a missed opportunity right here because this is the supply zone. So as soon as the market dropped after this candle here, that could have been a very nice. This could have been, but then we missed it because this candle was shooting down so fast. This was on a 5 minute, right? You remember that this candle shoot up so fast. Down, I mean. And then this here is another zone because as soon as this candle closed, that's the candle that where I said, okay, we're gonna wait now for a pullback, right? So at first I thought we're gonna get the pullback probably till here, but I don't understand why we actually must. I don't can't remember now. But okay, so this was actually also an entry. You see here when it pulled back here from when it broke out and these two green candles move up, it pulled back. That could have been a nice entry as well. But we didn't enter this. You see, the market gave us because it's still going in a downtrend. This is now on the 15 minute. And obviously, we got in way later because what I saw is after this, I realized, okay, I think we were late because this year was then another break in structure here happening because you can see it's breaking these lows now. So if I move this over, it's breaking those lows. And as it's breaking those lows, it's basically giving us again a pullback right here. Breaking out, giving us a pullback. And on 4700, apparently we entered there at 600, sorry. So I assume I waited for this candle to break, then we got in and check this day. Yes, Karen just saying now. It pulled back so quick on this day, and that's why we missed it. Yes. So for 600 right there, it didn't even give us like that entry to get in again. So you had to be very quick with this. Because just check how it dropped afterwards. After this pullback back to 4600. Remember, it came back to 4600. Can you see? All the way back here to 4600. And then it dropped again 400 pips. It dropped 400 pips. So crazy. But once you can see the structure, just check here. It's all about timing the pullback, right? Timing the pullback, seeing. For now, I can see this clearly. This body, that body, as you can see, it's touching all the way coming back, reaching that same area, coming, dropping, pulling back, and that is how we just follow the market. But another beautiful trade. I'm just giving you some tips like on how we could trade this type of market. Now, normally when it comes to risk management and a trade like this happen, my take is We don't chase. We don't chase. We wait for perfect opportunity to enter. It's no use when the market is left without us to now just enter any place. Because you must remember, there's something like a stop loss area. Your first, even though I send every morning a trade out and it looks like I don't put in a stop loss, I always put my stop loss in. My first job is to protect my capital. I don't want to give the market the broker money. I make sure that I grow my capital and it's you must be so caring over your money in your account. That must be your first priority. I don't want to lose money. I protect my capital and I will. And how can I protect my capital? By using a stop loss. By the reason why I keep my losses small and I'm not blowing up my account is because I don't over leverage. I don't use aggressive. Yes, there's days when I can confidently see the structure is looking good. I'm gonna throw in a 0.05, and that is on my personal capital, right? On funded prop firms is a different story. You're trading with more capital. I'm using 0.20 lots, 0.40 lots. So I trade that way different than I trade my personal capital because I understand how much money I have in my as my personal capital. So I want you to always think about that as well. When you take trades, it's not just about how much money you're gonna make, it's also about the trade quality. The quality of the trade setup matters. There's trades that you can't keep, you can't hold for too long because it's clearly the market is choppy and it's only going to give us like 80, 50, 100 pips. There's days when the market is not going to give you that 200 pips. And those days, you need to know when those days are. So it comes with experience, but you need to read structure. Because there's days when we're not going to get all these type of good days every day. Okay, let's go to the 30th of April when we took actually we took a buy. So the 30th was last week Thursday, right? Um, and I'm gonna go back to the 1 hour. All right. Now, interesting to see. Based on what I said about the market, right? We know overall the market is going in an uptrend. But this is a minor structure where we are currently in a downtrend. As you can see, for April, we were mostly in a downtrend. Now, this was the 29th. I actually wanted to go to the 30th. So you can see the 30th of April wasn't last week, Thursday. Okay, come on. Let me just fast forward quick. Can you see what happened here? The first thing happened, price broke the structure and continued going down. However, we're starting to see a change in structure here. As it came down, pulled back, came down, and then broke through. But now we start seeing price going up, coming down, and then it came and break this high. So it's making a new high, right? And this is the reason. This was a beaut. This is how I saw. Now, can you see when you don't read structure, it's very difficult to see the entry. And this is how I see my entries, right? So I first check what happened to the left, right? So like I just said now, so you would say, well, how did you even see that we're gonna buy? Because we are in a downtrend, right? How did you even spot that buy? Like here, 6 o'clock. This was the candle. Remember this trade, guys? What did I say? As soon as it breaks at 4, 5, 6, 6, we're gonna enter. So 4, 5, 6, 6 was right there. Why? Because it's, you see this blue candle, green candle. This Greek candle this week is right at 4566. So the entry was going to be right as soon, because here's my zone. That is our breakout candle. Now we're talking. So, but this is not based on a 15-minute. I've seen this move coming from a higher time frame. And that's the reason how I could see if it breaks higher. Remember, our TP1 was at 4580 and 4590, right? It shoot up so high. Check here, 4590 was here. That was another 237 pips. If you held it all the way up, check here. If you hold it all the way up to the next high, which is